Hello, this is Gary Schnitkey, and I'm an agricultural economist. So I'm going to talk a bit about ag econ as we move into this growing season. If we move to the next slide, we can see that we've had a pretty dramatic change in price outlook, and much of the decline in prices we have been attributing to COVID-19. Before March, we were looking at corn prices running in the 380, 390 range, and this happens to be cash prices. We would see the same trends in futures prices, but 380, 390 before March. And last time we looked, or last time Central Illinois we got these prices here, it was 312. Soybeans had a decline as well. They were running close to 9, over 9 a little bit earlier in this year, and now we are at 844. So both corn and soybean prices have declined. That has had more of an impact, as we'll see here in a bit, on the projected profitability of corn and soybeans. In the beginning of March, and what you're seeing now is planted acres in the United States along with the projections for 2020. In 2020, the prospective plantings report indicated plantings of corn acres in the United States for 2020 at 97 million acres. That would be near record. So very large plantings of corn acres in 2020. Acres were up 83.5 million, and wheat is holding in there at 45 million. Again, that's across the United States, and we were seeing much more plantings of corn in 2020 as compared to 2019, and that 97 million acres is actually a pretty large number compared to what many industry analysts were thinking would happen. And again, as we were looking at prices in the beginning of this year, we would say that profitability favored corn. And now, as we move into this COVID-19 lower price period, the economics would probably favor soybeans. Overall, I'm going to present some budgets here for this coming year. One of the things that we do see is some decline in cost for 2020. Those would primarily be related to energy-related cost. We've seen some declines in fertilizer, drying, and fuel and oil. For 2020, and this would be a Northern Illinois projection, we're showing a fertilizer cost projection of $125 per acre. If we look at particularly what anhydrous ammonia prices have been doing, they've been roughly $500 throughout much of the buying season. That is roughly at 2018 levels. Drying cost likely will be down in 2020. We had high cost, particularly in Northern Illinois. Overall, our average from FBFM would be $28 per acre. And again, that's sort of a mixture of on-farm and off-farm commercial storage, commercial drying. So that's a mixture. If it was commercially dried, it would be much likely higher than that. We expect that to come down. And we also expect fuel and oil to come down as well. One of the costs that we've seen increase is interest cost. It went from $23 to $26 between 2018 and 2019. That's pretty much an indication that interest or debt levels increased on farms. We're expecting that to hold steady into 2020, even though interest rates are declining. We expect to see some decrease increase in interest rate levels. For 2020, and this is for Central Illinois, we're projecting, and you can see there we have 2020 projections and 2018 and 2019 comparisons. We're currently using a $3.30 price per bushel for corn, which is very low, but is what the market is currently offering for 2020. And you can see there that would give us $710 revenue. ARC PLC payments were holding in there at $30 per acre, and that's not going to vary between corn and soybean acres. If we have PLC or ARC county, they're the same. non-line cost of $571 and cash rent of $275. So that's an average cash rent in Central Illinois for high productivity farmland. Those rents obviously vary quite a bit, but that comes up with a minus $106 farmer return. That obviously is not good. So let's look at some of the alternatives that might cause us to get higher. We could go back. We used 215 bushel yield 2020. That's a trend yield. Maybe we'll have yields back at our levels from 2016, 17, and 18. That would raise our farmer return 106 to 41, which still negative, but not as negative. We could also see prices go back to the 390 range, and that would help quite a bit. We'd get positive at least and roughly at the same levels as 2019, given that we have higher yields. Another thing is we could have the MFP payments that we've had in recent years, and that would again raise our farmer revenue to minus $27 per acre. And then a combination of the two, high yields, price of $330, which again looks like where we're at, $80, and that would get us to $40. So those things are possible. But right now, without some form of government aid and higher yields, a combination of the two, corn doesn't look particularly good. Soybeans, this again is a 2020 budget compared to 2018 and 19 actuals average of FBFM farms in Illinois. We're using 68 bushel, which is a trend yield, lower than 2016, 17, and 18 yields, but higher than 2019 yields. Again, we're using an $830 price, what the current market is offering, and $30 of ARC PLC payment. That gets us to minus 40, which is lower than the past 2 years, but is higher than corn. So without any government aid or something along that lines, we're looking at higher, relatively higher, less negative returns for soybeans. We get that return, those yields back up to 74, close to our trend line. We would get $10 farmer return. So that would get us positive here, not good, but positive. If we again go back to our trend yield, but have a higher price, we get back to $1 return. So both of those things you can reasonably think of happening, perhaps, probably the higher yields at this point in time. $80 MFP-like payment, and again, that has not been announced, but there's probably going to be some sort of aid given to farmers this year, federal aid, so that would get us back to 40. It's likely that that's going to be the same for both corn and soybeans. And finally, a combination of the two, and that gets us to $90 of farmer return per acre. So right now, one of the things that we did see is we don't obviously expect a lot of switching of corn and soybean acres in Illinois at this point in time. We're going, but if we have that one field where we can still make those decisions of corn versus soybeans, you might be leaning more to soybeans now after the price declines that we've seen here recently, COVID related. Somewhat strengthening that would be the lower cost of putting in a soybean field. And again, given where we're at, cash flow might be a consideration on some farms. So those lower costs may make it more advantageous to think of soybeans at this point in time. Again, most people have put their inputs on or made their decisions, and we're not thinking that there should be large changes here, but on those marginal fields, probably leaning more towards soybeans than corn. And also just realizing that COVID-19 worsened our economic outlook. There's a lot of things that can happen between now and then, but looking less optimistic than we were before. We want to thank our sponsors here today, and we are done with our presentations. Our sponsors here, Compier Farm Credit, Illinois Corn Growers Growmark. We thank them for their support. TIA CREF as well. University of Illinois. Thanks. We're part of the University of Illinois, and we have an upcoming webinar on COVID-19 on agricultural asset and lending markets. That's happening April 10th. You can register there, and we invite you to ask questions, and we will answer them. So thank you for your time.